Dear viewers, welcome to our channel GVS Bank Academy. I am GV Subbarao, retired AGM from Big Nationalized Bank, having 35 years of service and having qualified cost accountant, company secretary and semi-qualified chartered accountant with various diplomas. Now I am going to discuss about Accounting and Financial Management for Bankers JAIIB recalled exam questions from exam dated 14/5/2023. Already part 1, part 2 already uploaded. Now today I am going to upload part 3, 24 to 36 questions. Question number 24, error of omission. This is errors. When a transaction is completely omitted in the books of account or partially omitted in the books of account, that is called error of omission. The error of complete omission does not affect the trial balance. Does not affect the trial balance. Does not affect the trial balance. And finally, it may lead to frauds also. At a later point of time, any serious omissions may lead to frauds, operational risk in that organization. That is errors of omission. Question number 25, allotment of shares, over subscription. Over subscription. Total share application received by the public company may be for larger number of shares than it was offered it through its prospectus. So the company is getting more application than as offered through its prospectus to the public. Such situation is called as oversubscription. So whatever the oversubscription is there, that amount has to be returned to the applicants. Same manner, under subscription means the company is getting lesser number of shares than it was offered to its prospectus through public. Over subscription is also, under subscription also, both are there. Question number 26, process costing system. Production is a continuous process costing, and the costs are accumulated over a period of time. The process costing cost accumulated over a period of time. After that, distributed to individual items based on each product. So it is the process costing. The three types of process costing are weighted average cost, standard costs and first in first out. Three types of process costings are weighted average you can take, standard cost as decided by the management, or first in first out. Process costing is widely used in industries such as oil refining, and means one process to another process. In each process they are getting one byproduct out. Oil refining, food production also, and chemical processing, textiles, glass, cement, paint manufacturing. These are process costing is widely used in industries such as oil refining, food production, chemical processing, textiles, glass, cement, paint manufacturing. Now they may ask one question, where process costing they are used means oil refining projects, food production process, chemical processing, textiles, glass, cement, paint manufacturing. This is where process cost 20. Question number 27, standard costing. This is also one, it refers to preparation of a database of various operations, various components, service of the company. Based on these various operations, components and services, the company is preparing a standard for each costing. Each item they are preparing a standard costing. The difference between the standard costing which was prepared earlier and the actual cost to that product is known as variance. Difference. The difference between standard costing and actual is variance. Positive variance is good. Negative variance disadvantage to the company. Advantages of standard costing: it will improve to efficiency, allow for cost control of the organization, helps management to take decisions where negative variances are there. It can prepare accurate budgets, lower production costs. These are advantages of standard costing. Efficiency, allows for cost control, helps management make decisions, accurate budgets, lower production costs. Question number 28. Disadvantages of computerized accounting. Disadvantage, not advantage. Requirement of special programs and professionals. It requires special programs of professionals. Qualified staff required for operations. Costly computer peripherals and stationery. Regular backup is required as data may lost for various reasons. Backup. Computer virus. Requirement of special programs and professionals. Qualified staff required for operations. Costly computer peripherals and stationery. These are the disadvantages. 29. Going concern concept. It's one of the recording stage concept in accountancy concepts. Going concern. This concept indicates that the business is a going concern, continuity, and business tended to be a infinite. This means that the business continues with its activities as usual without any interruptions, and the transactions are recorded accordingly. Where it will be applicable, going concern concept applicable, it also helps investors that they can assume that investors, the life of the business is to be infinite. Continuity, that is there. Fixed assets are valued at cost price, not at market value. Book value, not at market value. This is one. Second point. Third, depreciation is provided based on the total number of years of the life of the asset. Balance of 1 year end is going to be carried forward to the next year. Year end balance is going to be carried forward to next year. Fourth one, reserves and provisions are created for any future liability. Reserves, provisions are created. Deferred revenue expenditure are written off over a number of years. How many years? It will depend upon the benefit the company is going to get on from the deferred revenue expenditure. During that period, it has to be written off, amortized over a number of years. These are the going concern concept applications. Very, very important. This is question number 29. Question number 30. Advantages, benefits of bank reconciliation. It helps the management to check the accuracy of entries made in the cash book, whether the cash book entries are correct or not. It helps to detect the errors and take timely action by the management. It is very important control technique for the control. It is one of the control technique. It shows the correct bank balance at any time. It has to tally between bank versus cash book. It reveals frauds committed by the staff handling cash checks, thus help the management to have effective control. These are the benefits of bank reconciliation statement. Overall, helps the reveals fraud committed by the staff, if anything is there. These are the 30 question number. 31, accrual concept. What are the essential features of this accrual concept? Revenue, income is recognized as it is earned. When you are earning it, you have to recognize the income in the income statement. Number 2, costs are matched against revenues on the same relevant time. Means matching concept. Costs, revenues are based of relevant time. Means suppose you are following quarterly, same quarter income, same quarter expenditure. Yearly you are following same quarter, same year income, same year expenditure. Costs are matched against revenue. Matching concept. 3, costs that are not charged to income Suppose under any circumstances we had not charged the costs incurred that are carried forward for future period and kept under continuous review what is happening in that cost. Any cost not charged to income account shall carry forward and kept under continuous watch. This Ind AS 1, Indian Accounting Standard 1 mentioned the accrual basis of accounting. Now, basic accounting assumptions also, one of the basic assumption is accrual basis accounting. This question they are asking in almost all accountancy examination. Question number 31. 32. Cost of goods sold, how we are going to calculate? Opening stock plus purchases plus all direct expenditure related to trading account minus closing stock. Cost of goods calculation is very, very important. One more compulsory question. Question number 33. General entry for purchase of plant and machinery. At the time of purchase of plant and machinery, what is the general entry? Debit asset account, plant and machinery account. This is a real account. Debit what comes in plant and machinery account. Credit you are giving check to the company bank account. This is also real account. It is going out. So this is a real account. Debit what comes in plant and machinery. Credit what goes out bank balance, cash is going out. So general entry for this is also plant and machinery. Question number 34. Wages paid for installation of machinery debited to machinery account only, not to P&L. If you are debiting to profit and loss account, that is called as error of principle. So what is the correct entry? Wages paid, transportation charges paid, installation charges paid for machinery, debit to that particular machinery account to asset account. That is. Question number 35. Prepaid expenditure. Prepaid. In advance we are paying the expenditure. That is called prepaid. Advance income tax paid. Advance rent paid. Advance salary paid. Advance insurance premium paid. These are the examples of prepaid expenditure. These are shown in the balance sheet as current assets. For that, at the time of closing, finalization of the accounts, all adjustment you have to made regarding prepaid are made in the final accounts as per matching concept. Why you are making adjustment? Current quarter income, current quarter expenditure, you have to book in that quarter only. In that context, whatever any advance payments you had paid, for that you have to make necessary adjustment entries as per matching concept. Prepaid expense should be taken into current assets. At the time of calculation of liquid assets, these prepaid expenses are not taken as part of. This is also important. Any prepaid expenses appearing in the balance sheet, that is part of current assets but not part of liquid assets. Example, this we had already discussed. 36. Net profit comes under which side of the balance sheet? Suppose from profit and loss account, net profit is there. That is going to be taken to balance sheet, liabilities, added to reserves and surpluses, or we can show as part of surpluses under part of reserves. So it is part of liability. So this is under which concept? Business entity concept. Under business entity contract, net profit is liability to the firm and net loss is asset to the firm. This is the business entity concept prakar. Net profit comes under liabilities and net loss comes under asset side. These are the 36 questions. Thank you very much for extending support to our YouTube channel. Thank you very much for